I'm a real estate agent and investor, and this is why I don't give a damn where prices are at or where interest rates are at, and why I'm buying in today's market and how you can make money in today's current interest rate environment and price environment that we have in the Toronto GTA real estate market. Now, a lot of the things that you hear about real estate investing, you're only hearing, I bought my house for $400,000, now it's worth $800,000. I made $400,000. And when you hear that, you get the perception that to make money in real estate investing, you have to buy at the floor and you have to sell at the peak. Here is why that is not true. Really quickly, guys, if you like this kind of content, if you're interested in real estate investing, give this video a like, subscribe to the YouTube channel, and leave me a comment. I would love to hear your thoughts on this topic. This is why I do not care where interest rates are at right now, and I don't care where prices are at, and how I'm buying real estate in this market, and how I plan on making money in this market. If you bought a house in 2022 at the peak, you locked in your interest rate, now you're down 20% in value. You should not care where the market is at right now unless you cannot afford to own the property and you have to sell it, which would be a mistake of your own. If you bought a property in 2022 at peak prices, and at the time you bought a cash flowing asset with long-term fixed rate debt, you wouldn't care where prices are at right now. You might not feel good at the party talking about, I'm the person who bought a $1.7 million detached house and now it's only worth 1.4, which those are the statistics in the detached market in Toronto for the last year and a half, from March 2022 until present day today. But if you locked it in for 5 years, your interest rate was locked in, your expenses weren't going to change, you wouldn't care where the market is at, because you should never be investing in real estate for the short term. You should be buying cash flowing assets that make money over time. You should have a strategic and planned way that you plan on increasing the cash flow on that property, and you should plan to own it for 5, 10, 15, 20 plus years. There are 3 ways of making money on real estate, and everyone only talks about number 1. Now, we cannot plan, we cannot predict what's going to happen to the market in the short term. So therefore, trying to predict when the floor is or where we are at in our current market cycles is going to be next to impossible. And you might know someone who did it. They got lucky. They got lucky. They didn't know that what happened to the market was going to happen to the market. You need to buy property today. You need to buy something that cash flows today. You need to lock in your debt so that way your expenses over the months don't change, and you need to have a long-term outlook on owning that real estate property. Let's look at the numbers. So if we look at the sum of cash flow over time, and again, we're going to ignore the prices just for now. If we look at the sum of cash flow over time, we bought a property that makes $500 a month. Okay, we collect our rent, we pay all of our expenses and our mortgage. After that, we are cash flowing $500 a month. That's going to be $6,000 a year. If we look at our time period for the next 5 years, that means we're going to be making $6,000 in the first year, $6,000 in the second, the third, the fourth, the fifth. After 5 years of owning this real estate asset, we're going to have a total accumulation of cash flow of $30,000. Now let's look at our monthly mortgage paydown. If we had a mortgage of $800,000 on a 25-year amortization at 5.85%, we are going to be paying off that mortgage by $81,000 in the first 5 years. We have $14,000 and change in the first year, $15,000 and change, $16,000 and change, $17,000 and change, $18,000 and change, a total of $81,000 paid off of our mortgage. That, in addition to the cash flow that we've made since we bought the property 5 years ago, is going to be a total of $110,000 that we've earned since we bought that property. Now, after the 5 years, we can reassess the market. Where are prices at right now? If I sold today, would I like the price that I got? Would I be making money if I sold today? If the answer is no, you lock in another long-term fixed rate debt. We're not trying to time the market on the interest rates either. Lock it in. You've insulated yourself to price. You've insulated yourself to risk. You've had 5 years to hopefully increase the cash flow that that property is bringing in. Therefore, your risk has decreased. Now you can own the property for another 5 years. You lock it in and you watch the market. If you want to sell, you just time it where the prices are high. You call your real estate agent. Hi, what's my property worth in today's market? Oh, I don't like that price. I'm gonna hang on to it. Hi, what's my property worth this year in today's real estate market? Oh, I don't like that price. I'm gonna hang on for longer. You're buying real estate that you can hang on to for a long time. You do not have to pay out of pocket to own the asset. It pays you, and you have a mortgage on it that you're paying down over time. That way, you are making money in any market. And that way, you don't care about timing the market. You don't care where prices and interest rates are at, as long as you go find a property where in today's market, with today's prices and today's interest rates, you're cash flowing. Lock in your debt, own the property for a long time. This is going to be the number one way to make money in the real estate market. And nobody, I don't care who they are, how many houses they own, how many houses they've sold, how old or young they are.
Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
No one can time the market perfectly every time. If they do, they're lucky. You do not want to be making decisions based off of that. So go buy real estate that cash flows. I would love to help you. In today's market, they exist, and they exist in every market. So take your time, buy the right asset, know everything that you need to know, and come up with a strategy of increasing cash flows. A lot of these buildings that real estate investors are buying right now, they have outdated rents. Naturally, you're going to have some turnover on that property, and every time you have a turnover, you can improve the unit and you can increase the rents. Therefore, your cash flow is going to be growing, your income will be growing as your expenses stay the same, and that's going to be safeguarding you to hold onto that asset for longer so that you can time the sale. And don't try to time the sale where it's the highest peak part of the market. Look at it and say, is this worth my return on my equity? Is this worth owning? And can I sell it for a profit in today's real estate market? This is why I don't care about where interest rates are at or where the prices are at. And I am putting my money where my mouth is. I'm buying right now. So this is not my advice to someone else. This is not just me giving you a sales pitch for why you should get into the real estate market. This is me telling you this is what I'm doing. This is the criteria that I'm buying on. I'm making purchase decisions right now. I just closed on a 9-plex last week in the Greater Toronto area, and I plan to accumulate and buy more with these exact same principles that we've gone over in today's market. So get your head out of the news, go out and shop real estate. There's amazing deals right now. Prices are down 12 to 22% depending on the asset that you're looking at. Right now is a great time to get in. That's my take on real estate investing in today's current market with interest rates the way they are and prices where they currently are at. I think there are some amazing deals out there. Happy shopping. And if you need any help, if you need an agent in your corner to help you analyze and assess these real estate assets, I would be happy to do so.